It's a new year and emerging market stocks are being trashed. The rand has reached an all-time low. China's market has gone bonkers. Countries around Africa have cut their growth forecasts. The billionaire George Soros is claiming that we're headed for a crisis echoing 2008. And Brazil living in a world of junk. This is the MoneyMakers, what's left of them. I'm Bruce Whitfield, and tonight I speak to the doyen of emerging markets, Mark Mobius, who is chairman of Templeton Emerging Markets. He has been a fund manager for many years with Franklin Templeton Investments, and he joins us on the MoneyMakers this evening, fresh from another global jaunt. I mean, you do still travel 200 days a year. That's the last number I heard.
Exactly. Yeah.
Next
stop is Mexico.
Okay, but you've come from Thailand, China,
right.
And where else?
And Romania. We have a big operation in Romania. And then here. And of course, as I said, the next stop is Mexico, and then Brazil and all the Latin American countries.
But still doing some 200 days a year of traveling.
Oh yeah, definitely. That's for sure.
I mean, are you still excited about the emerging markets complex based on the carnage that we're seeing? China, people blaming China for it. I'd be interested in your perspective for it. It started with China devaluing its currency in the first week of this year, and the rest of the emerging markets complex has got very nervous.
Yeah, I'm still excited because if you look at the fundamental growth numbers, emerging markets are growing at double the rate of the developed countries. Mm-hmm. So eventually that has to play out in the capital markets, in stocks and bonds.
And investors in emerging markets have been rewarded through the first decade, mostly, of the 21st century. It feels as if it's frayed at the edges. The Economist had that fabulous cover of the statue of Christ the Redeemer as a rocket lifting off, and more recently the rocket is doing a full circle and headed back toward the ground. Yes. It feels as if some of that miracle nature is beginning to wear off.
Well, yeah, you see what's happened, first of all, is that the U.S. market did so well during the last 3 years. So a lot of money came from emerging markets into the U.S., and therefore emerging market stocks came down.
It's nearly $600 trillion or something. I mean, an astonishing amount of money.
Incredible amount of money. But still, there's plenty there. There's plenty of money in emerging markets. Going forward, I believe that you're going to see a reversal because the U.S. market is not doing so well. Yep. And people are going to be thinking, well, maybe I shouldn't be putting all my eggs in the U.S. basket, and maybe we should diversify. Nevertheless, emerging markets, currencies and markets are down, with some exceptions. India is doing fairly well, and a few other countries doing fairly well. But generally speaking, in the last 3 years, people have lost money in their emerging markets holdings, generally speaking.
What's interesting, Mexico, to which you headed next, there's a really good story being told out of Mexico. Yes. Good, solid governance, things improving there. India's governance under Mr. Modi improving dramatically as well. More liberal economic policy. A desperately complicated country to try and understand, with more than 1.3 billion people and lots of different dynamics driving it.
Yes.
But it comes down often to governance, doesn't it?
Definitely. And what's happening in emerging markets is the internet, and particularly the smartphone. Now, there are more smartphones in emerging markets than in developed countries. With a smartphone, you can take pictures, you can listen to find out what's happening politically, you can uncover things that have not been uncovered before. So there's a lot of turmoil taking place here in South Africa, as you know. Yeah. If something goes on, everybody knows it very quickly. Yeah. So we're seeing that globally. We're seeing a change in corporate governance and in governance generally. And that means a revolutionary sort of milieu.
It also leads to maybe too much information. If one looks at the period of waiting, you're either relieved or disappointed by Janet Yellen's failure to raise interest rates, and by the time it's into halfway through the cycle, you're then panicking as to whether or not she will raise interest rates next time. And it's this data-driven dirge of information and the panic of central banks and what Janet Yellen's going to do next. There is some criticism that she shouldn't have done a pre-Christmas interest rate hike, which is sort of feeds into what you were saying about the state of the US economy and whether or not she moved too quickly.
That's right. One of the things that dragged down markets last year, emerging markets, was this fear about an interest rate hike. Finally, they did it. Now, I just noticed on CNBC, they were reporting that one of the Fed governors is saying, well, we're targeting 2 additional increases this year. Well, when people see that, they said, well, God, let me sit on my hands. Let me just wait to see what happens. And of course, if nobody's doing anything, then the markets are not moving and they're not getting rewarded. So the danger now is that we withdraw without really looking at the facts. What are the earnings of these companies? Are they growing or not? And by the way, it's very much now a stock picker's market globally. We've got to look for companies that are really making very good earnings and are growing, regardless of where they may be. They may be in South Africa. Of course, if you look at the macro situation here in South Africa, you say, God, oh, corruption, all these problems.
We could go into recession in the second quarter.
Exactly. But there are companies that are making money. Because remember, when the rand gets so weak, there are companies that can benefit from this weak rand. So that's the situation we're in now. We're searching globally for those pockets of growth and good governance where we can make money.
I remember probably 2003 you calling the opportunity for South Africa the massive undervaluation of South African companies. I think we're trading an average PE in South Africa of, say, 16. The resources sector pulling that down. Our rand hedge industrials, the likes of the Naspatters, the Steinhoffs of the world, which are making more of their money outside than inside of South Africa, pulling the PE higher. Are you in the market for South African resources at all?
Not yet. We're waiting for bottoming out, a change in the supply-demand situation.
And that's going to be driven by China?
That's going to be driven by India, I believe, going forward. Because you must remember, India is now growing at the rate that China is growing, 6-7%. And we believe that India will gradually begin to draw in these resources. But it's not going to be the same as it was before.
Yeah, but China was in this big industrial boom. It was going from zero towards 100, and it had a lot of building to do. India's got quite a lot of stuff built and made already. Its technology is here rather than in the factory necessarily.
That's true, but consumer demand is increasing, per capita incomes are going up, and the infrastructure is in really bad shape. They need to invest a lot more in infrastructure, whether it be railroads, subways, bridges, highways, you name it, they need it.
How long is that cycle, though? Because you say you're not ready for a South African resources stock. I mean, you look at Anglo-American trading in the 50s and 60 rand levels. Once South Africa's biggest company, it's at risk of falling out of the top 40. It's not quite a small cap yet, but it looks like it's heading that way.
Their time will come, and we will be looking at that very, very carefully. Because there's no question the prices of commodities cannot stay this low for very long in dollar terms.
We talked earlier about governance, and we talked about confidence in markets, and you're driven by the confidence that is inspired by the likes of Mr. Modi in India, by the good governance story that's emerging out of Mexico, and Mexico is doing really well as a very close neighbor of the United States. South Africa's governance has been tested very dramatically in the last month or so, the sacking of 2 finance ministers in 3 days. But the redeployment rather, of Pravin Gordhan, good track record as finance minister in South Africa once again. We go into 2016 facing ratings downgrades, facing a growing debt burden, a diminishing tax take. What's your feel about our...
What complicates the situation here is the elections coming up, because there'll be a desire on the part of the current government to spend in order to make things look a lot better than they are. But they're going to be very severely limited, because where's the money coming from? Foreign investors are not going to come in, and it's going to be very difficult to borrow. So given that situation, if there is some change at the local level, that would be very positive. If the ANC does not reach majority in many of the local areas, that would be a politically positive development, and economically it will be positive, because foreign investors will begin to say, hey, maybe there's a good chance for a change and improvement, and we should go in.
And it's the subtleties of this. The South African cabinet is meeting this week to discuss ways it can drive growth in the South African economy. Is it time for politicians to let go of the reins of the economy and let the economy do what the economy does, with some regulation on the periphery, rather than try to manage it from the center, which is our obsession?
In some ways, they've already done that by default. The local investors are now taking over. I mean, basically, if you talk to any businessman, you realize that he is running his business despite the government, despite all the problems that the government is imposing on him.
I mean, when you look at the situation where South Africa finds itself now, where South Africans, by and large, are pretty despondent, they're struggling to see a future that perhaps 10 years ago seemed pretty obvious.
Yeah.
Is there an example from other emerging markets where you've seen countries in this degree of despondency where they've done one or two things to pull themselves out of the malaise?
Yeah, I think maybe the closest comparison would be the Philippines. You're beginning to see change there. It's taken a long time since the end of the Marcos era, but you're beginning to see an improvement, and you're seeing the corruption being exposed, again, because of this communication situation, and the fact that the people working overseas are remitting billions of dollars into the country is also making a significant
What's the trigger, though, for those remittances to happen? Because for so many South Africans, they're just obsessed about getting money out rather than getting it back in again.
I think the trigger is a stabilization of the exchange rate. If you see a stabilization of the rand, then people will be bringing money back in.
All emerging markets currencies, though, have been very vulnerable. The
Right.
rand amongst them, it's been not the worst performer, and recently we've seen very rapid deterioration of the value of the rand.
Yeah.
It's the strong dollar. Yes, it's in an emerging markets basket. Dare you call the currency? Dare you call the rand?
Well, I feel that the rand has gone too far in terms of its depreciation. Because when you look around, when you come here and you begin to do some shopping, things are so cheap. When you have that kind of situation, you definitely will see the bottom. And then you're going to see at least a stabilization. And also look at it from the U.S. dollar point of view. How strong can the U.S. dollar get? How much can the U.S. government allow it to get so strong before they get into trouble in terms of their own exports?
Correct. There we go. Mark Mobius, thank you so much for taking time out of a very busy schedule. The globe-trotting Mark Mobius, he is with Franklin Templeton Investments. He's the chairman of Templeton Emerging Markets. My thanks to you for watching this evening, and I look forward to a year of fascinating discussions here on the Moneymakers. There'll be more Moneymakers tomorrow night. Until then, thank you for watching. Good night.